Okay, let's talk about India's relationship with money. We are, without a doubt, a nation of savers. But are we a nation of investors? We're about to get into this really interesting conflict that's right at the heart of India's financial culture. It's this gap, you see, between saving money and actually making it grow.
Let me ask you something, and be honest. Does this sound like you? You want high returns from your money, you've got these big ambitions for it, but when it's time to actually do something, you find yourself sticking to what feels safe, like a fixed deposit. If you're nodding along, trust me, you are not alone.
And we've got the data to prove it. A recent JEDR study found that a staggering 82% of Indians, that's that huge chunk of the chart right there, believe that old-school options like FDs and gold are just more reliable. It's a powerful instinct, this pull towards safety.
But here's where it gets interesting. That same study, it shows that 80% of us are also prioritizing high returns. See the problem here? It's like wanting the speed of a sports car, but you're only willing to drive it inside an armored tank. It just doesn't quite work.
And this contradiction, this mental tug-of-war, brings us to our first big idea, the investor's paradox. Honestly, it's the perfect way to describe this internal conflict that the numbers are showing us.
The study actually gives it an official name, the reliability paradox. And it just nails it, right? It's wanting the high performance you get from modern assets, like stocks, but only really feeling safe with the traditional ones.
This really breaks it down visually. On one side, what we want, that rocket ship of high returns and creating wealth. And on the other, what we trust, the unbreakable fortress of reliability and safety. We're basically driving with one foot slammed on the gas and the other one pressed hard on the brake.
So, look, it's pretty clear it's not a lack of ambition that's holding people back. What is it then? What are the real roadblocks standing between wanting that growth and actually going for it?
Well, the answers are really revealing. The top three barriers are all psychological. Fear of losing money, things seeming too complex, and just a lack of knowledge. And check this out. Lack of funds is right there in the mix, but it's not even the biggest piece of the pie. The biggest walls, it turns out, are in our heads. In fact, if you add up those top three psychological barriers, you get this number, 63%. That's right. Almost 2/3 of the barriers are in our heads, not in our bank accounts. This isn't really a money gap we're talking about. It's what the research calls a confidence gap.
Now, this mindset didn't just pop up overnight. To really understand why we as individuals have this fear, we kind of have to zoom out and look at the whole nation's history, a history with some really deep roots of mistrust.
For a long time, the main economic idea in India was pretty skeptical about creating wealth. It was all based on this zero-sum thinking, the idea that the economy is like a fixed pie. So if one person gets a bigger slice, that means someone else must be getting a smaller one. And that naturally led to a deep suspicion of profit itself.
And you can see that whole shift in thinking right here. The old slogan was Garibi Hatao, or eradicate poverty. A very noble goal, of course, but it's focused on splitting up the existing pie. The new mindset, the one we need, is Amiri Banao, or create wealth, which is all about realizing you have to bake a bigger pie first.
Which brings us to this really fundamental point. As one of our sources says, you just can't get rid of poverty without creating wealth. The two are completely connected. You can't have one without the other.
Okay, so keeping all that history in mind, let's jump to a really modern idea that just completely flips that old thinking on its head, the FIRE movement. So for anyone who hasn't heard of it, FIRE is an acronym. It stands for Financial Independence Retire Early. And the whole idea is to save and invest like crazy when you're young, build up a big enough portfolio, and then you can live off the returns and retire way earlier than usual.
The process itself is pretty simple, but it's definitely not easy. You earn your income, then you save and invest a huge chunk of it. I mean, we're not talking 10%, we're talking 50%, maybe more. And that just puts you on the fast track to financial independence, where your money works for you.
And it really all comes down to these three things. 1, aggressive saving. 2, wise investing in things that can actually grow your money. And 3, frugal living, so you can save as much as possible. It's a total lifestyle shift for sure. All right, let's tie all of this together now and really explore what a new money mindset for India could look like.
And this is the crucial link. When you or I decide to adopt an investor mindset, maybe even chase a big goal like FIRE, it's so much more than just a personal finance choice.
It actually plugs right into the national goal of building a stronger, more prosperous economy for everybody.
Remember that confidence gap we talked about? Well, this number is the opportunity. This is how we close it.
That's the percentage of Indians who say they're willing to try modern investments. All they're looking for is the right guidance to help them bridge that confidence gap. The ambition is already there, you know? It's just waiting to be unlocked.
One of our sources brought up this beautiful line from an old Hindi song that just feels perfect for this moment. Naye daur mein likhenge nayi kahani. In a new era, we will write a new story. It's about breaking from those old ways of thinking and starting a whole new story of growth and prosperity.
So, after all that, the big question comes right back to you. We've looked at the paradox, we've looked at the history, and we've seen the potential. The only question left is the one you see right now. What will your financial story be?